Welcome, ladies, to the Real Estate Investor Show, providing inspiration, strategies, and insight to empower women investors to live balanced and financially free lives. Now, here are your co-hosts, Liz and Andresa.
Welcome back, ladies. This is Liz.
And this is Andresa.
Welcome back to the Real Estate Investor Show. We have a mini-sode for you this week, which is a 10-minute or less topic where we dive in very quickly. We go deep, we go brief, and we send you on your way to have an amazing, amazing day. Right, Andresa?
I imagine like a little bird or turtle. It's like, he will send you to the ocean.
And today's all about how to vet a real estate accountant. It is a very important team member we all need. And we're going to get into some pitfalls and some things you should think about as you're vetting and scaling. This is not just for newbies. This is for scaling and evolving with your team. Okay, so this is, Andresa, I would say, one of the biggest things we talk about. We talk about it in our community. We talk about it in our meetups. And we talk about it with our members, our Strive members. And what ends up happening a lot here is that I would say out of everyone on your team, your accountant, and probably secondarily, I would even say accountant over attorney. I might go head to head with someone on that, but I think your accountant is probably one of the most important people, right, that you have on your team.
I do believe that. And I quite don't understand why people take so long to hire one.
Yeah. And I think, so I'm going to give you just a quick history lesson of how we came to be with our accountant. And because I want to give that as an example, and there's some teaching points there. So when you start out and you have a portfolio, even a small portfolio, you're not just going to do your taxes yourself, right? You need to bring somebody to the team. Even if you have one rental property, 10 rental properties, 5 deals, 10 deals. And the person we brought to the table, one of our first accountants, did not own any properties himself. And he said, no, I'm really good with real estate though. I don't own property, but I know real estate very well. Most accountants will tell you that, right? And I just remember having like so many circle conversations with this person. Like he didn't really protect us. He didn't really help us strategically. And quite honestly, he always told us, well, you can't do that. You can't do that. You can't do that. Now, obviously you need someone who's going to steer you the right way, so you're not getting audited by the IRS and you're doing everything in a very clean way. Of course, I'm not saying to not do that. However, he didn't come from like this space of let's think about this. Let's look at this. And so he ended up charging us a lot of money for not great counsel. So we ended up having to fire him. Then we went to 2 other accounts. So our account we're on now is our 4th accountant in our 15 years of doing this. And honestly, it was the same thing again. The people didn't have any real estate investing experience. I don't know why we didn't really learn. The 3rd person actually did. He had some rental properties. But again, the biggest thing that I think people don't think about is, one, do they come from a strategic standpoint?
What do you mean by that though?
Okay. So let's break that down. Yes, they're going to be able to run they're going to be able to run your project. I'm sorry, run the numbers on your project, right? Run the numbers of you run the numbers, excuse me. And you're sending that to them and they're going to be able to say, okay, this is what your tax liability is, or this is where we're going to be able to do this X, Y, and Z when tax time comes around. Obviously, every accountant should be able to do that. That's like,
I hope so.
I know that's like 101. But more importantly than that is a strategic conversation you're having with your accountant on a quarterly basis. And that strategic conversation should be, I'm flipping X number of properties coming up in the next quarter, or this is what's happening. I'm buying XYZ properties. I'm selling XYZ properties. Again, it could be 1, it could be 10, but you're having these strategic conversations because there is a tax implication to all of these activities: buying, selling, everything in between, especially is like active, right? You're flipping, you're wholesaling.
Yeah.
You're
Especially
doing things
with active versus passive.
right. And how you're deemed on your tax return. What are you in a partnership? Are you single? All these things impact like a holistic viewpoint of your tax liability. And obviously everyone wants to pay the least amount of taxes legally. I mean, who doesn't, right? So I think the biggest thing is if you're working with someone who literally, if you said, do you have strategic conversations with your clients about their portfolios. And they said, well, it depends on the person, or if you don't really get a very confident answer back around that, I would be very wary to work with that person. And honestly, I'd rather work with someone who actually, the majority of their client base, and you want to ask them this, actually are real estate investors. They don't have
I
one
agree.
or two.
And I and the cherry on top is when they say yes, and we do have calls schedule ahead. Because I also, Liz, I don't want to keep calling them to say, hey, can we have a call? Can we? I that's like not proactive, right? I want. Maybe I'm asking too much, but that's what we get nowadays, right? We have those quarters calls. So observe if you are the one initiating that or they are the one initiating that.
Agreed. And I think you have to say and you have to feel like confident with the person you're talking to. This is where I've been, and this is where I want to go. And how do I set myself up for most success? So when our business started to change, we were technically an LLC, right? Me and my husband's company. And then we started to get into some different business activities of more, growth around the flips and this and that. And we actually shifted from an LLC to an S Corp. Well, we didn't think of this. This wasn't our idea. But he showed us, okay, this is where you're headed. This is where you're going. It's going to make sense for you to make this transition now so you could set yourself up for the most success. And that was one of the best things we did a number of years ago. Again, wouldn't have thought that, wouldn't have come up if we didn't have a strategic conversation of not just where you've been with your portfolio and business activity, but where you're going. And I think that's the kind of people, right, you need to have on your team. And again, it's not because we worked with him when we had a small portfolio, and he's grown with us. So it's not just like this only warrants if you have, a tremendous amount of units or what have you. That's not the case at all. I would rather want to work with somebody who knows what they're doing, and from a strategic standpoint, before I have that large portfolio, right? Before I'm starting to scale. So I set myself up for the most success. And I also know the impact that my flips or my renovations are going to have on my tax liability before it happens. No one wants to get stuck with a big bill, right?
Especially though, because there's this concept of like having value by being active, and there's no value, or you didn't work hard enough to earn just being passive. And there's so much tax implication on that. It's not even funny.
Absolutely. And you don't know what you don't know. So you need to be working with somebody who really has been there. So a couple of questions just as a takeaway, right? Because everything we do with our minisodes is like, okay, this is what's coming up. This is what we're hearing. This is what, a lot of women need and want. And I don't care if it's right before February, we're talking, this is strategically being mindful of who is on your team. So number one, do they own property? And better yet, they own property, or they've done the activity that you're looking to do more of or less of. In other words, you're a flipper and you flip tons of property, and they own a single family rental. Well, okay, that's a little different, Mm-hmm. So I mean, it's better than them not owning anything or even having any rental properties, but still, I'd really want to see they have in their wherewithal and their experience, right? That it matches in some ways, not exactly, but it matches where they are and what they're doing. We got into larger apartment complexes. Our attorney right now our accountant does not own large apartment complexes, but he knows the implications of it, and he does own rentals, and he owns multi. So again, that's good enough. It's not like I'm going to fire him because he doesn't own the same exact assets we own. But again, you have to be mindful of those things and just kind of be aware. Number two, do they have experience with real estate investors? And then what percentage of their client base makes up investors? I'd ask them that very specifically. What percentage? But they're like, oh, we work with everyone. We help everybody. It's the same thing. Really doesn't matter. It does. I'm telling you, I'm on the fourth accountant. It does matter. It matters significantly. And not only does it matter, he had to clean up our past tax returns, and we got money back. And we were self-employed. That's like unheard of. Who gets money back that are self-employed? Do you know what I mean? Like it was like we were even W-2'd. And he's like, this was all wrong. Your previous tax returns from these very, very smart accountants were wrong. and we redid them, if you will. We put in a file for that. Fourth thing is, are they tactical or strategic? Do they have strategic conversations with their other real estate investor clients or are their business clients on a quarterly basis, so that you're getting set up for the most success in your business and for future earnings and just future processes? We talk a lot about different things with our accountant. It's not just how to reduce our tax burden. It's right, the LLC to the S corp. So those are the 4 things you really want to be mindful of. That's why our meetups and our investor community is amazing, because those are the kinds of people that we know of and we work with. So a lot of women have, don't figure it out yourself. Don't Google it. Ask people. That's why we're building the community we're building.
Absolutely. And we have a ton of CPAs that hang out on our Facebook community group as well. So I would take advantage of that to ask about a couple of questions and understand. And quite honest, do you like working with that person? That's also important to me. It's like, do I like that person? It's pleasant to work with. We don't have time to work with people that we don't don't vibe the same way per se.
Absolutely.
So that's great, Liz. I love those questions, and we encourage you to jot that down and take that in consideration if you currently have a CPA or if you're looking for one.
Yes. And as always, please join us over on our free Facebook community. Share with us what you got out of today. Share with us what you want more of. We are here to serve you and to empower women to live a financially free and balanced life. So thanks for joining us.
Thank you. If you enjoyed this podcast and want to receive updates on our next interviews, go to our website, therealestateinvestor.com. There, you can subscribe to our show, become part of our investor community, and get updates on upcoming episodes.
If you like our show, please share it with other women who would benefit. And don't forget to leave us a rating on iTunes. We'd really appreciate it. And as always, we encourage you to take one action as a result of today's show and put it into motion so you can live both a financially free and balanced life. Thanks for spending time with us.
Ciao.